All right, good morning and welcome back here to Trader Minute. Great to have you aboard. I'm particularly excited to be with you here today. As many of you know, I've not been around very much here over the last little bit. I apologize for that, but you know, on the mend and things looking up. I'll be with you here for much of the morning, and then I'll turn you over to Carl, and I'll be back kind of in full swing next week. One of the disadvantages of kind of not being around, haven't been able to follow things as closely as I'm used to. It's been a long time since I've not been able to follow the market real closely. One of the advantages to that is to be able to come at it with a little bit more of a fresh perspective, and to kind of see, hey, what's going on, what's setting up, what's out there, and I'll kind of talk to that a little bit here today. Let's start off this morning, setting the stage for the market. We're looking at a market where the futures on the S&P 500 are up about 4.5 points if you consider fair value. Nasdaq futures are the strongest. They're up about 11 points here. Some strength out of Google, an upgrade into Google, and an upgrade for Apple. Apple price target lifted to 700. Google price target listed to 1,250. So very kind of bullish upgrades for both of those stocks there. And then yesterday after the bell, some decent earnings out of Adobe. And Adobe is marching higher here this morning, and so those are some of the positive things that the market is seeing. Market really is trying to digest what it expects to see next week in regards to the Fed. Fed meeting is next week, and that will be dominating the headlines. One of the things here, if we take a look at next week's economic calendar, you'll notice that the meeting begins on Tuesday, and then here on Wednesday is when the news is announced and when the press conference and everything is for that. If we kind of look, there is a little bit of data ahead. The data ahead that I'm most interested in is this consumer price index. Okay, the thing here with the market and with the Fed and with tapering, they've been very clear on what they're looking for to taper, and they've basically come out and said they need to see the unemployment rate drop and they need to see inflation uh, get up get up into the 2% range. Okay, the market has not seen any heavy inflation by the Fed metrics, and unemployment has been dropping. So there's a fear that the Fed may taper. Well, one of the things this morning that came out was the data here for the producer price index, which is one form of inflation. Now, you could argue they look a little bit more at the CPI, the Consumer Price Index, but here on the PPI, we're still at 1.3% inflation. And so we're still not up to that 2% inflation area that they are looking at, or that they would like to see in order to come in and taper. Now, when it comes to taper, basically, we see the market selling off a little bit last week and this week in anticipation or in fear of taper. But what has been the case is that any talk and chatter on taper has really sent the markets higher most recently. We'll talk about that more here today in terms of what we can expect. But overall, there are some very strong bullish and some very strong bearish arguments, in regards to taper. Yeah, Martin, I wish. Yeah, I wish. I wish. All right. Let's go take a look here at our positions. Let's start with LinkedIn. We entered LinkedIn yesterday, about an hour before the close, and the stock's down about a buck 20 since we entered. You'll notice there's not a huge delta on that option. And we did that for a reason. I mean, a $5 move in LinkedIn isn't a very big move at all. But LinkedIn, just a very interesting chart with with some of the aspects and some of the things going on in the social media here. They've had their nice corrections here in October, November, and they're starting to mount back. LinkedIn was upgraded right here. Okay, they were upgraded here last week and last Friday, and they shot up here on the unemployment or on the jobs data, and essentially triggered a trend rider bull signal with this. I don't have the Bollingers on this chart, but this is the action that it created. Since then, as the market's been going down, LinkedIn's held on very well, and has come right back down to the 7-day moving average. Let me adjust this here just a bit. Let's see here. I'm just gonna add a few bars here so I can show you. There we go. All right, so as we look at this, we have this little island action here. Could this be bearish? Yeah, it could. If LinkedIn were to gap down and create an island reversal, that could be a bearish setup. So 228, break of 228 is where we're concerned. Hey, you know what? Calls aren't going to work. May even just need to switch those into puts. But as long as it trades above 230, 228, remains strong with this nice little pullback below the 7. The 50 isn't much of a concern. The 100, the 200, the major moving averages aren't that big of a deal given the previous price action on LinkedIn. They're not trading off those major moving averages. We have a MACD that's turned positive. So we have some very bullish features here and a really good risk-reward setup in regards to LinkedIn. Now, we are looking for LinkedIn to move back up into the highs of the year on any sort of move, on any sort of run. 245 would be a short-term price target. 255 to 260 is what this chart pattern would ultimately suggest if we continue to move higher here for LinkedIn. Okay. Tesla. Tesla had a nice day yesterday, up about $7, held on really well on Wednesday as the markets got beat up. Pushed above 145, everything we would like to see. In fact, yesterday as Carl and I were chatting, I mentioned to him my favorite trade out there on the board is Tesla. For the challenge, do we just put the rest of our money into Tesla and run with it? Decided not to put all our eggs in one basket there. But one of the things to notice here with Tesla is that it has nothing to do with the market. In fact, if we look here at the correlation, I'm just going to come down here and put the correlation indicator in here. And you'll notice that Tesla's actually been negatively correlated with the market to no correlation with the market as of late. And that's one of the things with Tesla. This is not a play on the market. Even LinkedIn, it's not a play on the market. Okay, as kind of went through some of the various charts yesterday, we see a very, very broad mix of bullish and bearish signals. There's some very good arguments, bullish and bearish in regards to the market, and so we stayed kind of away from the broader market and really kind of went with plays that didn't have a whole lot of market correlation to them. Now, this morning, we're looking at Tesla. It's trading up about 60, 70 cents, which, by now, Tesla, that doesn't matter. 50, 60 cents either way. Even a $1, $2 move on Tesla isn't a big deal. LinkedIn here set to open up just slightly higher, but that's kind of what we're looking at with the market up about 4.5 to 5 points here. One of you asked about chasing win. Chasing win here today. I can't argue it. In fact, let me pull up as the bell rings here. Let me pull up the 1 minute chart of win. Breaking up here above 181. Okay, here on the open. I can't argue it. I don't have a good stop point for it, to say, hey, if Win doesn't have any upside follow through, where do you stop out on it? You could use 180, but it's a little more arbitrary. But overall, I cannot argue chasing Win here. I do think it does have a little bit more bullish action, but above 180, it gets a little less predictable. One thing that's opening up here a little bit higher today, Baidu. Okay, Baidu broke out the other day. pushed all the way up to 180, has come back down here to 172, pushing up a little bit here. I can't argue buying it, but the action that it created over the last couple days would suggest to me that, hey, maybe you're only looking at a price target of 175, 177, so about $5 or $6 to the upside there on Baidu. As the market opens here, let's just quickly here, LNKD, you can see up about 56 cents. Not really creating any major change in the technicals from an hourly perspective or from a daily perspective. And then Tesla here up about a buck 13. Continuing its momentum that it had into the close yesterday. You'll notice the market kind of sold off into the close yesterday. Tesla remained strong, continued to push up. All signs still point higher here on Tesla. We'd love to see it pierce that upper band. If they can pierce that upper band, we could put a 170 to 180 price target on there. Yeah, AK, thoughts on rolling Tesla calls? Yeah, if Tesla can push up into that upper band and kind of close in that upper band, I can't argue rolling those calls and looking for an even higher number there on Tesla. Now, my email when we made the Tesla trade, my email filled up. It said, Jeff, Tesla, you were bearish on it. You were talking about Tesla going to double digits and pushing down below 100. And now you're in calls on it, and you're right. You're right. Tesla here. All signs pointed. I said I wouldn't be surprised if it broke below 100. Well, there was a change. There was some news that changed the situation. Even technical action with a strong volume gap up. That changes some of this technical action. It says, hey, odds favor it going higher, so I don't want to be stuck in some sort of, bearish mentality that keeps me from riding the next trend. Now, when Tesla does run out on this next move, wherever it runs out, if it does start to sell off strongly, could it still get to double digits? Yeah. Absolutely could, but in the short term here, all signs still point higher for it. Couple things here. Market as it opens up, we're looking here at a market that is a little bit stronger, erasing much of yesterday's gains. This has been the story of the market in 2013. Have a day of selling, have another day of selling, and then, hey, things look like they may fall off a cliff. Things look like they may go down. Taper, interest rates, what's going on? And then the market in one day kind of starts to erode and erase much of the selling action that had been and starts to push on higher. And generally this year, that push higher has been led by technology, and we are seeing the exact same thing here this morning. The move up being led by technology, the Adobes and the Apples of the world, the Googles, kind of leading things higher here. All right, let's go take a look here. LinkedIn, Tesla, nothing really to react to. LinkedIn here showing up about a buck 30, but still not trading real heavy. Tesla up about 280, still not trading real heavy, but both of those in good positions. Let's go take a look at a couple individual plays. The one that's most interesting to me this morning is Anadarko Petroleum, APC. You'll notice Anadarko gapping down $9.50. Anadarko had a lawsuit ruled against them, basically saying that they were on the hook for $5 to $13 billion in liability. Now, this news has been known. They've known that there's this danger going in. That's one of the reasons the stock has been selling off recently. Is fears of this lawsuit and of this ruling. Most analysts have come out and downgraded Anadarko in the last 24 hours. J.P. Morgan, Goldman, a lot of them have downgraded Anadarko. But there was an interesting note out this morning from Jefferies, and Jefferies broke down the numbers here on Anadarko. It basically said that, hey, with Anadarko and this gap lower, down to 75, the market is pricing in a $13 billion hit. And so as they broke down the fundamental numbers, they basically said the market is fully priced in the lawsuit and the multi-billion-dollar hit that Anadarko is going to take with it. So what was their determination? It's priced in, buy, and they have a 111, something like that, price target here on Anadarko. One of the things to keep in mind about Anadarko is this is a one-time hit. This isn't something that's going to affect earnings for years and years to come. Okay, this is a one-time hit, a one-time event. Whack. A lot of times these one-time hits, they kind of exhaustion gap down. They will start and they will fill these gaps and kind of climb all the way back up. To see Anadarko climb back up in the 82, 83, $85 area would not be surprising. Am I looking to buy Anadarko this morning? No. Why? Option values are going to be pretty expanded. They're going to be pretty rich. They're not going to be really good. But as this news kind of fades here into the end of the day, the market has the weekend to digest it. We head into Monday, Tuesday, and start to see a floor kind of build in on Anadarko. Become a very interesting buy opportunity to play some sort of snapback rally. It's also, Anadarko's still appealing this decision. They're trying to say the bankruptcy courts had no way of or no authority to make this decision, so it's still kind of in a heated battle. But according to Jefferies, everything priced in. When we look at it fundamentally, is Jefferies right? Well, we can see their argument, but, fundamental arguments always vary. But if we see the price action where we start to see Anadarko stabilize down here below 75 and start to trickle up, that could offer a very, very nice play. Another stock here, Amazon. Amazon this morning announced that they were going to be releasing a food program, essentially kind of competing a little bit with Costco. I'm interested in it from an Amazon standpoint, simply because I think Amazon could really push up above 400 here. But also more interested here for Costco. Okay, if we look here at Costco, Costco had this beautiful breakout, and let me zoom in here. But Costco essentially broke out here above 118. We had this little cup and handle pattern going on. Broke out here in November, rallied up to its price target of 126, and now it's come back down to support, where some major volumes are starting to build. Okay, as far as looking for a stock to kind of potentially base out and to move higher, Costco is in a very nice situation here. At the same time, I don't want to get too aggressive just yet because of the heavy sell volumes. But if we were to see one more small leg down and some sort of bullish reversal, Costco could be set up very nicely here from an upside standpoint. Okay. Yeah, Joe. What about selling Anadarko puts? I can't argue it. If you're a stock trader, you don't mind holding the stock, and you want to sell some Anadarko puts. Let me go take a look here at the pricing on them. Anadarko. Yeah, I mean even for this, well, you're not getting a ton of value. But for these December 74 and a half, selling them for $1, that's not too bad there. If you come out to January, you can sell the 70s for $1, and fundamentally, for this thing to go below 70 would be very, very difficult. Okay, so yeah, some naked puts on there if you're going to do them, but just understand if you're going to do the naked puts that you're probably going to own the stock. Well, that the risk there is owning the stock, and there's still some turmoil and everything else surrounding Anadarko. Okay. Yeah, Wick, Triple D Lotto's looking good. They are. Triple D here has a very bullish formation. This type of pattern here overall has been very bullish, especially in 2013. And Triple D has been kind of your ultimate momentum stock. SSYS is kind of in a very similar situation there. Okay, so nice one. Yesterday there were a bunch of stocks, like Colgate. I think this was on Carl's top three. Trend Rider Bear Signal, pushing lower. And yesterday there was, as I kind of went through, it'd been about a day and a half since I'd really kind of dug into some of the charts. As I've been away sick here, and kind of got back into digging into some of these, and really there were a lot of things that looked like this here on Colgate. At the same time, there were a lot of things that looked like this here on U.S. Steel, where there weren't quite the breakdowns coming down to support, bouncing up. Now, no real confirmation that U.S. Steel's ready to break out, but with a lot of these little hammer candles after some selling. AK, you're in Apple and Baidu Lottos. Okay, yeah, Apple here. Apple's one that they got the upgrade to 700. They're still weak here this morning. This is one I still have, potentially buy 558, 560. The one thing we are looking at with Apple, and the danger here with Apple, is if we just put a normal retracement, okay? We just put a normal retracement on it. We're looking around 550. Okay, and that's my worry there with Apple. And if it doesn't hold on to 560, it could very quickly move back into the 550, 545 area. And to me, that would be a more tempting area to pick up Apple if it doesn't hold 560 here. Okay. The U.S. dollar. Okay, U.S. dollar is finding a little bit of strength here this week. That's kind of encouraged a little bit of selling overall in the market. Okay, and the U.S. dollar. I was asked if I'd be buyer of the U.S. dollar here, and my answer is no. The overall trend is still lower. The highs are still lower, the lows are still lower. But if the U.S. dollar starts to break above 2180, that'd be very bullish for the dollar. Okay, kind of in relationship to the dollar, here's gold. Gold during this sell-off, we've talked about, hey, it's got to move above 122, 122 and a half, and hold above there for a couple days. Gold tried to bounce, has failed there. There's just nothing bullish here to kind of sink my teeth into and say, hey, I'm pretty confident in a trade higher here on gold. Let's take a look here. Tesla. Go to our positions here. Tesla up about a buck 90. LinkedIn here up about 259. Both a little bit off of their highs, but moving up. LinkedIn would really like to see this break above 236 to 237 here today. I think there's a good shot of that, but to feel comfortable holding it over the weekend, really want to kind of see it push and hold above that 235, 236 area. Would be really nice to see. Tesla at the same time, there's not really a hey, hold this price level. Just kind of continue up in those upper bands, continue with the strength without having any major strong downside reversal to it. Okay. Alrighty. Yeah, would I add Nucor here? Yeah, Nucor had what was it, Wednesday, where it dropped real hard, and no, that action Wednesday was ugly, and what it corresponded to was a top in the Australian dollar, and you'll notice the Aussie dollar continuing to fall, and so what I would want to see with Nucor, I'd want to see the Aussie dollar find a little bit above bottom here before trying to go and bottom pick Nucor with it trading below the 7. Now Bollingers are contracting on Nucor. Do I think this is anything majorly bearish? No, but in for a small consolidation for a week or so, waiting on the Fed. Yeah, probably where that is here. Okay. The VIX. Okay, the VIX here down about 36 cents here to this morning. But big move higher on the VIX on Wednesday. Look, I know some of you are in VIX calls, and the VIX calls, is there a whole lot of predictability in the market? I don't think so. Most things continue to point higher, but they are eroding, and I'll show you some of it. They are eroding to the point where they could trigger some bear signals here, even this afternoon, Monday, Tuesday, ahead of the Fed. Okay, and so the VIX is basically, if you're buying the VIX or holding the VIX, you're basically, expecting some turmoil. And for option prices to increase because of that turmoil. Uh, I do think the VIX has a good shot of going higher next week. Uh, am I am I hugely bearish on the market right here? No, not yet. But I do think that the VIX has a good shot of moving higher with the Fed, with some sort of potential downside action. But keep in mind, most of the Fed action so far this year has really been taken to be quite bullish. Okay. Yeah, could you do a straddle on the VIX? Yeah, let's go look at the pricing on them. If we look here, the pricing here on the VIX. Yeah, I mean, you're not talking about anything incredibly overpriced. Do keep in mind these options expire a little bit differently. These options are going to expire. They're going to expire before regular call options. So if you're going to do them, come out a little bit more. But you could do a January 16 call, a January 15 put, some sort of straddle like that. The one thing to keep in mind if you're ever going to straddle or strangle the VIX is the VIX really isn't going to get much lower than 12. So while you have upside potential into the 20s, 30s, even 40s, you really only have downside potential down to 13 and 12. So any sort of put play on the VIX doesn't have the same type of profit potential that a call play on the VIX has. Okay, so kind of instead of straddling the VIX, I'd almost want to buy S&P 500 calls or IWM calls and VIX puts as a straddle. Instead of using, or excuse me, VIX calls as a straddle. Instead of using VIX puts, use the IWM calls or something like that. Use a call on a major index. So if the market goes up, your calls can appreciate much more than what VIX puts would appreciate. One of the things we talked about a while back here, the bullish percent index, as being a really good kind of breadth indicator for the market. And being away here, not really being able to follow the market as closely. One of the first things when I got back yesterday, I look and I say, all right, where's this bullish percent index? What's it doing? Has it triggered a bear signal yet? And you'll notice that it hasn't. It's only moved down about 5 points. It needs to move down 6 points to trigger a bearish signal. Okay. Now, is it close? Sure. Sure. This is a kind of a classic. Hey, the indicator is eroding. It's going down. Hasn't quite triggered a bearish signal, but strong potential of that happening. Small caps. Okay. Small caps have been hit. You'll notice that throughout the year, as small caps have gone down or underperformed the market has been a little bit weak. Let me zoom in here. I want you to notice up here on the MACD. Okay, we had some negative divergence. What does that mean? Well, the IWM or the small caps were hitting a new high here in September. Okay, while the MACD, the momentum was not nearly as high as it was back here in August. And so we had an indicator going a different way from the price of the stock, or here of small caps, the IWM. Okay, tends to be a very bearish signal. Didn't unfold that way. We got one push down and then boom, flew back higher. Well, we're seeing the same type of an action here. We're seeing the negative divergence as the IWM set a new high. We're seeing the first pullback here. Do we have October type action after the Fed? Or do we have more normalized action where we finally get some sort of breakdown and some sort of retracement into normalized levels down here to 105, 104? Okay, that's kind of what the market's wrestling with and trying to figure out in regards to what's going to happen. So far, as long as this IWM continues to hold the lower Bollinger Band and doesn't pierce and trigger a trend right or bear signal, I still want to look at the market a little bit more with a little bit of a bullish light. But at the same time, it's not it's not anything that I find to be overly bullish either. Yeah, AK Apple breaking the breaking here below 560, right? Here on the minute chart, you can see the breakdown here below 560. All the way down to 556 in a matter of minutes. That's Apple, being at that suspect level there. So yeah, some puts on Apple here. If you're let's see here, they're probably these Apple Lottos. Yeah, I mean the 555s are a buck 20. Yeah, there's nothing that's overly compelling there. But yeah, Apple breaking down there just needs a little bit more of a sell off, in my opinion here. Okay. Good deal, AK. Nice quick trade. Very nice. Um, Yesterday, some of the weakness, consumer staples. Okay, continuing their weakness here today. Utilities, okay, kind of staying pretty flat here. Industrials holding up. The one area when we talked about the bullish percent index a while back, we talked about how the bullish percent index was actually bearish for the energy sector. And this energy sector has continued to be weak. Anadarko's weighing on it a little bit here. Chevron down here today. Exxon down here a little bit today. Uh, but overall, some of these are really starting to get to some very interesting support levels, especially Halliburton here. I'd love to see Halliburton come back to about 48 and start to make a new move back above the sevens. But some of these have really come back to almost a point of bottom picker, where we're kind of looking for an upside trade would make a lot of sense here. Still too early. I still don't see anything in this energy group that makes me say, "Hey, let's rush out and buy it." But overall, they finally had some of these pullbacks, and very nice there. Yeah, Martin Ford, very beautiful move here on Ford. Ford had a little bit of a dragonfly doji yesterday. Carl and I were talking about it a little bit. It had broken down below 16 and a half. Now snapping back above. This is a very bullish move overall for Ford. And GM, while it's been outperforming Ford for a while, to see some of this snapback back into Ford, to see Ford go up into the 17 and a half, $18 area, would not be very surprising there. Okay. Um, Bank of America. Bank of America here, in my opinion, still needs to pull back into about the 14.80, $15 area. It had this beautiful run right here. I think it will have another run. It will have another move higher here. Okay, another overall move higher here. But this is a very normalized type of correction. Probably will come back down into the 15, 14.80 area. Would kind of be its pattern there. Oh yeah, Martin, your inputs on Ford. Yeah, this is a bear trap. This is a bear trap here on Ford. Ford snapping back above the seven. Okay, and look, this has just been the peril of playing bearish all year. Um, you know, when bearish signals have been there, the snapbacks have been fast and furious, and the bears have really kind of taken it hard trying to run anything for more than a few days, on the bearish side there. Okay. So Ford up about 2.5% here. Let me see if there's any news on there. It's outperforming the market tremendously here this morning. Probably some sort of upgrade. Now, just some news here. Just some normal type chatter. They're going to hire more people, come out with more models. Um, they're going to conduct a year-end briefing on December 18th. Okay, so yeah. Verizon here. Yeah, Verizon having follow through. Some of these AT&T, Coca-Cola, Pepsi, these consumer staples or these interest rate sensitive stocks continue to suffer, continue to be drugged down here as well here. Okay. Yeah, Robert. Chevron's one I'm very interested in today. This Dragonfly Doji action so far. I mean, we're only, 20 minutes into the market open, so, not really a big deal to key off of. But down here around 120, Chevron's very interesting in regards to having some sort of snapback rally. One that I'm very curious on is PetroChina. PTR has come back down here into the 110 support area. If some of these big oils around the world, the Chevrons, the Exxons, the PetroChinas, and whatnot, are able to start bouncing here, I think they could have some nice year-end rallies. So far, not enough on them to give me a nice trigger to say, hey, let's get in there. Exxon to 100, I agree with the AK 100%. In fact, I'd rather buy Exxon than Chevron, PTR, Halliburton, Anadarko. I'd rather buy Exxon than any of those. Okay, the chart pattern, the price action on Exxon is tremendously bullish. A lot of this run here, October, November, was Warren Buffett buying in, and there's still a lot of Warren Buffett buyers that look to be needing to get into this stock. All right, let's go take a look at our positions here real quick here. Let's start with our newest position, LinkedIn, up about $2.30, up about 1%, essentially erasing a little bit of the sell-off that came in right at the close. Nothing really to react to there with LinkedIn. If LinkedIn does close below 230 here today, I will be very nervous about. We will potentially pull it off. If it moves below 228 intraday, we probably wouldn't wait. We'd just kind of pull it and run. Tesla here up about $1.50. There's just nothing. I mean, for Tesla, $1.50, it can move that in a matter of 5 minutes. So nothing really there. A little bit off its highs, a little bit off its lows. Very similar to LinkedIn. Keep in mind, Tesla and LinkedIn, these are not market weighted positions. These are not positions that we would expect to go down big if the market goes down, or to go up big if the market goes up. These are very individual. They're kind of their own thing here. Okay. Last stock here, Facebook. Facebook added to or announced that they're going to be added to the S&P 500. That continues to give merit here to Facebook. As long as it's above the 7, there's nothing there for the bears here on Facebook. In fact, all signs continue to point higher here for Facebook. Could that change? Could that shift? Yeah. But I would need to see Facebook break down below the 7-day moving average there. All right. Well, thanks for hopping on. In a little bit here, I will get on and talk about some of the market breadth, talk about the overall market in much more detail. And we'll go out and we'll look at that and kind of set the stage for the Fed next week and for kind of the holiday season, and then some of the seasonal effects that we expect to see there. I don't expect that we'll be making a move here on Tesla or LinkedIn here anytime this morning. Depending on where they close today, we'll decide whether we want to hold them over the weekend. But for now, we'll continue to hold on to those. All right. Thanks for hopping on. Any questions, please, Jeff at TraderMinute.com. Happy to help you out, and we'll talk to you later. Take care.